Hi guys, my name is Alexander Sheffalo. I'm a risk and ops analyst here at Eightcap, and today I'm going to give my bi-weekly gold report and discuss its price action headed into the FOMC minutes, which will happen Wednesday at 7 p.m. GMT and 2 p.m. Eastern Time. So in essence, I'm going to cover some of the fundamental factors you must consider when trading gold this week. Now, so the major factors to consider this week for gold are the following. Number one, reviving safe haven demands lens for some gold price. So against the backdrop of looming recession risks, geopolitical tensions turn out to be a key factor that offers some support to the safe haven gold price. North Korea launched 2 ballistic missiles off of its east coast on Monday after firing an intercontinental ballistic missile into the sea of Japan's west coast over the weekend. And today, Tuesday, Russia has announced it will continue its military exercise, unquote, which likely means ramping up its attacks in Ukraine and prolonging the war. This ultimately has driven some safe haven flows towards gold, which has bounced off of its 1819 low on Monday. Next factor is the bets for more rate hikes by the Federal Reserve will cap the gold price. So the upside for gold price, meanwhile, has remained capped amid the prospects for further policy tightening by the Federal Reserve. In fact, the markets are pricing in at least 25 basis points liftoff at the next 2 FOMC meetings in March and May. The bets were lifted by the United States CPI and the PPI, which showed that inflation isn't coming down quite as fast as we had hoped. Furthermore, the Federal Reserve will publish the minutes of its last policy meeting on Wednesday, as stated before, with the whole Federal Open Market Committee, FOMC, assessing the monetary policy. It will be key to see whether some policymakers saw the need for the Fed to reconsider the 50 basis point rate hike in the case they saw enough evidence to suggest that the slowdown in inflation was temporary at that time. Such a development could revive bets for a 50 basis point hike at the next meeting and weigh heavily on the gold price. As you can kind of see in this trend here, this could fuel another current downturn that gold is on and repeat this sort of downward channel that occurred from March 2022 to November 2022, when the Fed started continually raising rates. If not, the markets are unlikely to read too much into the FOMC minutes ahead of Fed March meeting, where the revised summary projections will be unveiled. In the meantime, the price is likely to oscillate this week in a range amid thin sort of trading volumes on the back of President's Day holiday in the US. Now, lastly, as stated before, the stronger the US dollar further acts as a headwind for gold price. Several FOMC policymakers, including Fed Chair Jerome Powell, recently stressed the need to keep raising rates gradually to fully gain control of inflation. This in turn keeps a lid on the non-yielding gold price amid the underlying bullish sentiment surrounding the US dollar. Hence, it will be prudent to wait for the strong follow-through buying before placing bullish bets around the US dollar denominated gold and positioning for further gains. Now, let's zoom in here to the 2-hour time frame and get some of the recent technicals and price action. All right. So that looks about right there. Okay. So on Monday, gold price was trading around a flat line at the start of the week, consolidating Friday's sharp rebound from the 7-week lows of 1819. Markets remain cautious amid the renewed geopolitical risks while awaiting the minutes of the U.S. Fed February meeting due later this week. Towards the end of the day, gold edged a little bit higher, as you can see here, and looked to build on Friday's bounce from the 1819 through 1818 area, or the year-to-date low. The price stuck to its modest intraday gains through the early European session and even went as high as 1845 region before retreating which supports its lack of bullish conviction and continues it on this sort of downward trend here. So today, gold trading is once again on the wrong foot. It's kind of continued this downward trend after hitting 1845. And as it trades kind of closer to thick support of 1830 and 1835, currently at the moment at 1832, at the current time of about 1 p.m. GMT. So the US dollar market dominance is rising again on the back of growing geopolitical tensions ahead of the 1-year anniversary of Russian invasion of Ukraine. And later today, US President Joe Biden will make a significant appearance in Kiev. And obviously earlier today, Russian President Vladimir Putin's speech on the State of the Union occurred. Obviously, Joe Biden has yet to give his speech at Warsaw, but I assume this speech will further geopolitical tensions and have a similar effect on gold. Geopolitics aside, from a technical perspective, any subsequent move up is likely to confront a stiff resistance near the 50-day simple moving average support breakpoint currently around 1862 to 1864 area. This is followed by the 1872 through 73 supply zone, above which gold price could aim to at least test around 1890 to 1900 and reclaim that round figure mark. On the flip side, the 1835 horizontal zone now seems to protect the immediate downside for gold price ahead of Friday's swing low around the obvious 1819, 1818 region. Some of the follow through selling could make gold vulnerable to accelerate the slide towards the 1800 mark en route to a 100-day simple moving average support, currently around 1785 zone, kind of in this area here. Overall, the critical horizontal trend line support from January 5th low at 1825 remains a tough nut to crack for traders bullish on gold. Ahead of that, the 1830 round figure should be taken out on a sustained basis. Friday's low of 1819 will be next on gold's sellers' radar, should the downside gather some traction once again. On the other side, any recovery attempts will need to find acceptance above the 1850 psychological level, above which a fresh run up towards the flattish 50-day moving average at 1864 cannot be ruled out. And further, Valentine's Day's $1870 mark will be the next stop for gold's bulls. Okay, so that concludes our video today. Thank you all for tuning in, and I'm looking forward to updating you again in 2 weeks' time. Have a nice day.